See site for additional facts.
Do you have over $10,000 in credit card debt? If you're feeling the financial impact with unprecedented economic challenges, DebtBlue is here for you. With DebtBlue's Success Guarantee, you pay nothing unless your debt is reduced or completely resolved.
I'm just living sky high right now. I'm very thankful for it, and the team at DebtBlue are phenomenal. They're able to work with you. They're great.
Call for your free debt resolution information now. 800-200-6895. 800-200-6895.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide, AI and Your Financial Plan. It's new for the month of July. And Paul, we're hearing companies all over the investment universe talking about how they're utilizing artificial intelligence in their workplace. And one of them that's been getting more and more mention is specifically in investment design and strategy. What are you hearing from major money managers when it comes to artificial intelligence?
One of the powerful things about AI is the ability to take vast amounts of data and synthesize it down into something comprehensive that's easily usable to run portfolio models out there. So utilizing price to earnings data and other financial metrics, these AI systems can collaborate with all of the data that they're provided and come out with an outcome to rebalance a portfolio and to make certain investment decisions over time.
Now, what I get worried about is companies starting to market this stuff as something that it's not. To your knowledge, is there anything out there that is actually recommending securities based on AI that has any sort of track record?
Not at this point in time. It's really important to note that this technology is in its infancy, and while it is exciting and there is a lot to be learned and further developed here, there is no proven case that there is a perfected AI model in place that's publicly available.
The brand new guide from the Armstrong Advisory Group for the month of July is called AI and Your Financial Plan. You can get your copy by calling 800-393-4001. Again, that's AI and Your Financial Plan. Get your free copy by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here. We're wrapping up the last full week of July, as next Friday will be August 1st, which is a little bit hard to believe, but we continue to see stocks moving up and just hanging in there despite, some questions that are out there. And a number of those questions, at least in recent days and weeks, being answered rather positively. So, you take a look at the S&P 500, and you say, okay, yesterday was another new all-time high close for it. Today opens in positive territory as well. You take a look at the Nasdaq Composite, same thing, another all-time high close yesterday and in positive territory thus far. And you look at the Dow Jones Industrial Average, and a little bit of a different story on this side of things, where just because of the composition of it in particular, the Dow having United Health making up, a big chunk of it.
Oops.
Well, you do what you can, but the Dow still can't quite break through to those new all-time highs, but knocking on the door at this point. And I think ultimately the summary of kind of how we got here, Mike, in my opinion, is I think twofold. I've been thinking about this over the last week or so, and there are two things that I think got us to this point. The first is, in the broad economic data, while we do see a modest slowdown that's happening in the U.S. economy from a growth rate perspective, there are no real red flags right now because of tariffs as it relates to the U.S. economy, and so I think that the absence of them to this point is something that has continued to be encouraging for investors. And the other piece is, look, I think after the volatility that we saw in March and through the first, half, 2/3 of April, I think obviously you have a lot of investors that are offsides that are now chasing on any particular point in time, and so that's kind of helping just because positioning has remained light, even though it's getting back to normal now, and so that's been a big push to kind of get things back to this point as well here.
Yeah, the word resilient has been brought up a number of times here, and I think that spells it fairly well. But to clarify there, it's not just the resiliency of investors and their willingness to buy stocks. It is the resilience of the United States economy, which has fared better than most were anticipating in the face of tariff threats. And so, yes, markets are hitting all-time highs. That's in part happening because the economy hasn't fallen apart.
And I think when we look at the economic data, so next week we're going to be getting GDP for the second quarter. It's going to be the first reading that we get there. The Atlanta Fed, through their GDP Now projection, currently estimates that Q2 GDP grew at a rate of 2.4%. So that's a bounce back from the rate of negative 0.5% in Q1. When you look at those kind of as one unit, the first half of 22, effectively what it tells you is that the estimate is that, hey, U.S. economy grew somewhere around 1% in the first half of this year. Goldman Sachs has an estimate out there of 1.1, so it tells you, yeah, there's a slowdown because obviously when we look at, the prior few quarters, we were growing, 2.6, 2.7, 2.8 as far as, where U.S. GDP was coming in. So there has been a modest slowdown. I think what we're hearing from most companies right now is the modest slowdown that happened as we went through the first half of this year is showing signs of stabilizing, and they're not seeing further degradation right now. And this also meshes with some of the projections I've seen for the second half of this year, which is that economic growth is likely to be somewhere in that 1 to 1.5% range as well.
All seems reasonable. I think we're going to talk about tariffs and where they have gone. We talked about this throughout the course of this year, but it was basically a story of, hey, if tariffs get implemented, it's going to show up somewhere. And the three areas we thought that it could possibly show up would be in consumers' wallets via higher prices, in corporate profits via absorption there without higher prices, or in foreign suppliers. And we're going to be covering pieces later today about where it seems to be showing up so far. And then the big question there is, when do people get fed up with that? And it could be individuals, it could be those suppliers, it could be investors who are asking questions of those companies and their profit margins. But that's ultimately what we start seeing in all of this. But for U.S. equity markets, the big companies that lead, NVIDIA, Microsoft, these are not companies that are heavily affected by tariffs in the first place.
So I think ultimately where we stand as we, kind of start to wrap up this week is markets continue to chug along because there hasn't really been any bad news that's been broad enough to cause any significant volatility in markets. And I'm not talking about, volatility like April. We haven't even seen like a 5% pullback.
Right.
So I think ultimately there's been a real absence of, concentrated bad news. Some signs in June that we were seeing a little bit of that slowdown, but it's moderated a little bit. And so I think we'll see what the next set of data shows. And certainly, as we talked about earlier this week, it is a monster week for data and earnings next week. You go down the list, you got on Tuesday a couple different home price indices, you got job openings, you got consumer confidence. Wednesday, you got that Q2 GDP report, and you got the Fed. Thursday, you've got jobless claims, you've got PCE price index, personal income and spending. Friday, little thing called the jobs report and ISM manufacturing. And that's just on the economic data side of things. You look at earnings, Monday's pretty quiet because no one of note
Mondays and Fridays are quiet on earnings.
Yeah, no one of note wants to report earnings on Friday. You get a company called Kforce that's reporting earnings on Friday. Don't know what they do,
Kforce,
but they're reporting. Them and Ultra Clean.
Ultra Clean.
I bet they're really clean. Tuesday, you got Visa, Procter & Gamble, United Health. Wednesday, you got Microsoft, Meta, Qualcomm, ADP. I'm just giving you the heaviest hitters. Thursday, you got Apple, Amazon, MasterCard, AbbVie. So a lot of market cap, a lot of big names reporting next week. And you got a lot of balls in play here. And by the way, August 1st also happens to be the tariff deadline for a bunch of those letters that went out. So there's a lot in play next week that we're going to be looking at. And you could see some fireworks in either direction. I can very easily see a case where you sit here and say, hey, the economic data comes in great. The earnings, particularly from big tech companies that have been driving this market with kind of a renewed pace in the last couple months after lagging actually in the second half of last year and Q1 of this year. But hey, those tech earnings come in good. Okay, like that can drive markets forward. There's an easy case to be made that you could see a couple more percentage points in markets to the upside. The counter to it is, hey, if the economic data starts to, show that July is kind of a turning point a little bit, the labor market may be weakening a little there, and if the Fed is more hawkish than people expect, and if we get, higher tariffs coming into place on August 1st, yeah, there's a case that you could see some renewed downside volatility. So I think next week is going to be really interesting and kind of a pivotal week for markets to determine, hey, where's the next leg of this puppy? Is it up or down? And we've got a lot to sort through. So I'm pretty excited. I would say on a scale from 1 to excited, I'm a yes.
Yeah, I mean, to that point, these big tech earnings, they don't need to just be good. They need to be surprisingly good.
Exquisite, if you will. Exquisite. Let's take a quick break. When we return, yesterday, President Trump headed down to the Federal Reserve to check out the state of the Reno. We're going to discuss that visit right after this.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Artificial intelligence is having a profound effect on daily business. Its reach and result is significant and will likely only continue to grow, and that may present an incredible opportunity to include in a financial plan for the future. Hi, this is Chuck Zodda from the Armstrong Advisory Group. AI's technologies could be described as groundbreaking, and that's why we've written a new guide this month called AI in Your Financial Plan. Understanding how AI works may offer you insight and information about how to craft a plan that you haven't yet thought of, but it's not without risk. Call the Armstrong Advisory Group right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001. You can also request this guide online by visiting armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. the U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
All right, so yesterday, President Trump made the trip over to the Federal Reserve to take a look at what's going on with the renovations there. And I believe we have the audio from that visit. So, Tucker, can you fire that up for us?
Yeah, I did edit it a little bit, but this is pretty much the exchange between Trump and Powell, the meat, if you will. Here we go.
So we're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
He's handing him a piece of paper at this stage.
About 3.1 as well.
Readers are coming out.
3.2. This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added.
Our entire capital.
Yeah, you just added in a third building. Is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
But
it's
not new.
So we're going to take a look.
So that's the audio from the visit, and I'll tell you the memes that have come out of this already in the first 16 hours after that clip aired have just been fantastic. It's there's some great stuff out there on the internet. It's the first time I've said that in a while. So here's the thing, Mike. I don't know anything about the Martin building. I read about it this morning just because I knew that we would be talking about this, and
Sure.
so I read about it just because I was curious. The Martin building was actually built in 1974. And it was named after William McChesney Martin, who was chair of the Fed from 1951 to 1970. So there's that.
Okay.
The renovation was completed in 2021, so it's not active, it's not ongoing right now. And ultimately, it was work that was also authorized during President Trump's first term. So I look at this, and I continue to come back to the fact that increasingly where I stand, and this is kind of the most likely outcome here, the most likely outcome is that President Trump wants to continue to make things as uncomfortable as possible for Jerome Powell, but ultimately ends up not trying to fire him.
Can we talk about something that I find impressive?
Sure.
If somebody on live television, let me take that back. If the President of the United States was questioning me about construction costs live on television, and then handed me a piece of paper with a summary of costs that I had never seen before, my ability to, in that moment, come back and say this has nothing to do with the project that we're currently undergoing would be extraordinarily limited. I'm fairly impressed by how quickly he responded to that, Jerome Powell.
Yeah, I'm pretty sure I would be like, we'll wait until after, we'll sort it out.
Yeah.
In front of the press.
I recognize that that's kind of what he has to do now in this job, is be prepared for anything with the president, but I don't know. I wouldn't be prepared to do that when standing next to the president of the United States.
I think it's very much Powell, trying to say, this is my turf.
Yeah.
This is not where you're supposed to be. This is, an area that's carved out for me and my team. So, again, the most likely scenario is that the president is simply trying to pressure, make things as uncomfortable for Powell as possible, in the hope that he either quits on his own or just, eventually is like, okay, fine, whatever. The possibility of the president trying to fire Powell still exists, which is something that, if we're being completely honest, never had to say in any with any prior Fed chair. It was not something that was even discussed.
And we alluded to that a little bit yesterday. I mean, your comment was, it's interesting that this is occurring after markets close, after 4 p.m. If you were going to do something pretty extreme, you would want to do it when markets are closed. This wasn't that.
No, it certainly wasn't. So I think ultimately, as we've discussed before, the Fed is a self-funded institution. It is not taxpayer funds that are covering the cost of these renovations. Furthermore, I don't think Jay Powell has anything to do with the actual cost of it. There very much most likely is some kind of waste that is happening in a construction project, as there is in every construction project that ever happens. Is there fraud? There has been no evidence presented of any fraud that is happening as a result of the renovation. And so, quite honestly, this story should be a nothing burger, and I don't really think there's any meat on this bone based on what we see today. If there's new evidence that emerges that, the Fed is not fully disclosing, X, Y, and Z, and they're, doing whatever it might be that actually would represent, fraud as opposed to just, hey, construction costs have gone up since we authorized this, then I think we could have something to talk about. But ultimately, I don't think this is a story worth continuing to cover in any way, shape, or form, given what we know today.
Can we turn instead to another central bank where we know there is some things that don't seem directly related to central banking the Austrian.
Which one's that?
The Austrian National Bank that has a collection of 29 violins, 3 violas, and 6 cellos, including several Stradivarius violins that they lease out to or give out to musicians on an occasional basis to play.
Honestly, waste, but not fraud.
No,
fine.
waste.
They want to do that. They can do that. It's.
To our knowledge, we have not seen anything about the United States housing any rare musical instruments in the Federal Reserve building in D.C. or acquiring any of them. That does
maybe
not
they
appear
should.
to be
Maybe
part
that
of the
could be
cost
like
overrun.
part of QE.
Yeah.
Instead of just buying mortgage-backed securities, you could buy instrument-backed securities.
A couple of oboes.
Yeah. Get Yo-Yo Ma's cello over there,
Yeah. Okay,
French
so
horns.
Are we ready to just...
I used to play the French horn.
Did you really?
I did.
Huh.
I did.
I used to play the cello.
My father used to bribe me
Tucker,
to not
we should start a
practice the
band.
trombone.
Oh, man. We could do that. It
We
would
could call it
sound
Hello.
awful. God.
I think it would be just fantastic. We could even try to play the Fed. I bet. Do they have orchestra space there?
I'm sure they do
I mean,
with
it's
these
a
renos.
$2.7 billion renovation. Of course they have orchestra space.
What are the acoustics like in the vault?
Yeah. Any acoustic
boy.
paneling in those renos?
Yeah.
Okay, so, yesterday was a big nothing burger. Are we
Yeah, honestly,
good to call it that?
Yeah, until something else materially changes here, quite honestly, I don't think there's anything to pick at on this.
I feel like that was the peak yesterday.
Right? Like
that was it, yeah.
Like if that's it, then that's it. Like, I don't know. If if something exciting were to happen, wouldn't it have been when the two of them are in the room on TV together?
It would seem so. Like if something dramatic and exciting were going to happen, the president would have and should have announced it when he was standing there in the construction site. That would have been the opportunity for the photo shoot. So I think that this awkward, weird exchange of, whipping out a dramatic paper that doesn't seem to have anything to do with the construction project was it, and we can move along.
So let's take a quick break coming up here, and when we return, we've got Wall Street Watch that we're going to go through, talking about what's moving in markets, but then we also got Intel earnings after the bell yesterday. We'll tell you how kind of the former national champion of semiconductors reported their earnings next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After the S&P 500 and Nasdaq notched yet another record high, markets today are narrowly trading higher. Yesterday's close marked the S&P's 13th record close of 2025. Right now, the Dow is up by 0.1% or 51 points. S&P 500 is up nearly 0.2% or 12 points. Nasdaq is up 0.1% as well, or 33 points higher. Russell 2000 is off by about 0.25%. 10-year Treasury yield is up 1 basis point, now at 4.42%, and crude oil down 0.6%, trading at $65.62 a barrel. The big news in the tech space surrounds struggling chip maker Intel after it reported a wider quarterly loss and also said it will cut 15% of staff as it seeks to refocus on AI chips. That stock is sinking by 9% at the moment, and Chuck and Mike will have more on Intel coming up here on the show. Meanwhile, the FCC approved Paramount's $8 billion merger with Skydance Media, paving the way for the deal to close in the next few weeks. Paramount shares are up modestly. Sticking with the media space, where Charter Communications is dropping 18% after the cable operator fell short of quarterly expectations. Elsewhere, Centene shares are up 5% despite the managed care provider posting a quarterly loss that saw membership declines across its Medicaid and Medicare businesses. Decker's Outdoor stock is jumping 13% after the maker of Ugg boots beat earnings and revenue expectations. Deckers cited higher than expected sales of its flagship brand, as well as its popular Hoka sneakers. Volkswagen lowered its financial guidance after its first half earnings were hit by $1.5 billion of tariff costs, and online used car retailer Carvana was upgraded by Oppenheimer to outperform, where the firm said Carvana's business model is now humming, generating meaningful cash. That stock is up by 2%. I'm Tucker Silva, and that is Wall Street Watch.
All right, Mike, let's talk a little bit more about Intel, or more like Outtel, am I right?
Ah, got him.
Yeah. So here's the deal with Intel. They are trying to turn this ship again. They're just trying to turn it in the exact opposite way that Pat Gelsinger was turning it over the previous, I think it was 5 years that he was in the chair when he was trying to fix things. And I kind of wonder, like, if I'm being 100% honest here, like, in the semiconductor space, if you're dead for 5 years, is that it for you?
Can you be revived?
Like, is that it for you? And this is a different dead than Intel was after the tech bubble, because here's the thing, is after the tech bubble, Intel stock fell significantly. You know, I mean, you talk about, like, where it went, and it went from, you know, being a $50 stock, almost $70 stock at the peak of the tech bubble, down to, you know, in the teens. So it lost, 60-70% of its value. It's not because the core business was fundamentally bad. They were still the dominant CPU maker for, personal computers, which were the dominant form of computing, for the next 15 years. And so they still had a good business. They were still profitable, but the stock had been overvalued, and they were still just the biggest player out there who basically kept AMD around, cute little AMD, in order to, fight off antitrust concerns. And the business was fine. It wasn't great. It wasn't awful. It was fine. Intel stock from 1997 through 2015, even with the, downturn that you saw, still had a total return of 124% over that time. So 5-6% a year, even with the tech bubble and the financial crisis, that's not awful management, quite honestly.
Okay.
Here's the problem, is that for the last 5 years, they have not been able to execute at all. They've tried to get into the foundry business, which if you're not familiar with semiconductors, being a foundry, it's basically what Taiwan Semiconductor does.
Mm-hmm.
You take third-party orders for what they want as far as their chip designs, and you make them in your fabs.
And that was the big push from Gelsinger over the last,
Yes.
course of the last 5 years. He pushed the Biden administration and got into the CHIPS Act and was promising investors funding from that on the construction of these foundries. Sorry, go on. But that's been the big push from Intel prior to the new CEO.
It has been. And so where you sit today is basically it hasn't worked. They just announced yesterday another round of layoffs, another 15% of their workforce. And I think this is the third one now in the last 2 years as far as layoffs that they're going through. So you got to imagine that morale at Intel is pretty not great. And here's the other thing. Like when we look at the stock, and I'm going back 38 years exactly, 28 years exactly, just because it's convenient for me. If you look at the return since July 5th of 2025, Intel stock from a price perspective, not factoring in dividends, is down 7% in that time, which is bad. The total return, factoring in dividends, is 79%. 79% during that time, which, again, over a 28-year period is like 2% a year.
Yeah.
You would have been better sticking your money in the bank, even with 0% interest rates for 10 years, and you would have come out probably in about the same place. The S&P 500 during that time period, total return factoring in dividends, up over 1,000%. So, and a lot of this problem has come since 2020. There was a period in early 2020. You look at things during like early COVID days, S&P 500 relative to July 25th of 97, S&P 500 total return was 291%. Intel was 282. They were basically in a dead heat through March of 2020. And since then, the S&P 500 has, doubled from that. Tripled from that point, while Intel has effectively lost like 70% of its value. So, I got to be honest. In the semiconductor space, there's so much capex that's needed. There's so much R&D that's needed, and Intel feels so far behind that you just wonder, like, can they get there and stay relevant? And I don't know the answer.
Yeah, they are now. There's just nothing special about what Intel is doing. Like, yeah, they are the dominant chip maker in laptop computers. I'm looking at my Lenovo ThinkPad with an Intel chip in it right now, but anybody can make that. And so what are you going to be, the cheapest maker of computer semiconductors? I kind of doubt it. With Gelsinger, I could at least understand what his vision was. Do you know what the new vision of Intel looks like? I struggled to put it together in my head.
It seems like what they're talking about is just, fiscal discipline and this and that, but I forget who I heard it from. You can't cut your way, to growth.
Right.
Like, you've got to find something that is going to generate, real meaningful growth for you. I don't know what it is. I don't know what it is for them. And it's something where the problem is in the semiconductor space, it takes a long time to turn things. It's like you've got to commit to things and stick with them for a while. And I don't know where they're going to be going.
Yeah, I mean, they speak to, in this journal article at least, a 14A technology, which is just a process that allows more efficient chips, more transistors. Intel's hoping that it will drive growth and attract large chip designers as customers, aiming to develop the technology by the end of the decade. You don't have that long if you're Intel.
Yeah, I'm hoping to regrow some hair by the end of the decade,
Yeah.
but it's progress is slow. It's actually going I'm not hoping to regrow hair. It's better this way. Let's take a quick break. When we return, let's talk a little bit about what we are seeing as far as costs on investment vehicles, different products, whether it's mutual funds, exchange-traded funds, private equity, hedge funds. They've all got their management costs associated with them. The trend in the last 25 years has been down. Are we seeing signs that might be starting to shift? We'll discuss after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
All right, Mike, we got a piece in Bloomberg. It's titled, Wall Street is Challenging the Low-Cost Investing Revolution. And just a couple stats that discuss this. The first thing is that we continue to see this trend towards exchange-traded funds taking up a larger share of assets compared to mutual funds. Back in 2000, ETFs were less than 2% of the overall market by assets. Now we're talking north of 35% and growing at a rate of 1 to 1.5% a year as far as market share that they're taking. But the interesting piece is if you look at the pricing of new ETFs that are being launched. In the 1990s, they were coming in at about 13.8 basis points. 2000s, 13 basis points. 2010s moved up to 21.4 basis points. In 2020s, 38.8 basis points. So in terms of trying to explain this shift, I came to a couple different conclusions. The first is a larger percentage of the ETFs that are being launched now are actively managed ETFs.
Yep.
Which would come with higher cost. The other piece is that, and this is, again, just getting at a methodology issue, because I was looking at this. This is data from Morningstar, and there's a little footnote on this. It says, quote, analysis of surviving funds. What it tells you is we don't know what funds were priced at that don't exist anymore.
Yeah.
That died. It's complete survivorship bias. And so it's very possible that if you looked at, ETFs that were launched in the 90s, maybe the average weighted expense ratio was closer to like 20 or 30 bips, but the expensive ones died off. Maybe the same thing will happen over the next 20 years with these ones. Or
it could.
The other piece that I point out on this is some of these funds have lowered cost over time. That's typically the trend that you see. Just because these funds are starting out with high expenses today doesn't mean they'll stay at those high expenses as they grow. For evidence of this, look at basically any of the major ETF issuers, whether it is Vanguard, whether it is iShares. Like, it's not every year, but on a pretty regular schedule, you see announcements, hey, we're lowering the cost on these funds because, we have more assets now. And so that's something to keep in mind as well.
Yeah, I mean, look, if you are launching a new ETF today, you're probably not trying to compete with Vanguard or
we're gonna have a better
BlackRock,
500 fund,
right? Like, we're gonna have
that?
a fund that is better than the S&P 500 and cheaper. Like, it's already almost free. So naturally, if you're launching something new, it's going to be different. I don't know. I would say that I am, again, this isn't backed by evidence, but I am hearing more about these more complicated ETFs, these actively managed ETFs, the ETFs that involve option strategies in there, and more complex strategies, I guess. And I think that's natural. If you are one of these large investment companies who has traditionally relied on expensive mutual funds to fund your business, and that business is rapidly being eroded, you launch an ETF, repackage it as actively managed, and maybe attract the flows that way. I guess where I think it comes, rubber hits the road for investors, is for years there's been that big push of go to ETFs because they're cheaper, and on average they still are compared to mutual funds, but that is changing. That is changing. That is, you do have to be more deliberate about it, and it's not universally across the board in the way that if you talk to the average investor and ask them, like, hey, what's the difference between an ETF and a mutual fund, I think most people would point towards cost, wouldn't you think?
Yeah, I think the two things that would be pointed out by most people are, I hear ETFs are cheaper and ETFs you can trade during the day.
Yeah.
Would be like the big things that most people would mention, but not always the case.
Yeah. So the point would be they are much different today than they were at their launch 30 years ago, but they have been around for some time, and all sorts of things are going to make their way into these. They are not all going to be universally good or bad. I would counter one of the points that's made in this article that, generally speaking, the only people that are going to benefit from these more expensive ETFs are the creators themselves. Like, no, not necessarily. There were plenty of good mutual funds that were quite expensive that absolutely dominated markets and did great by their investors. But you do need to be discerning. And I think the most important fundamental investment question that I always tell people to ask themselves is, do you understand what you're investing in? Right? Like, before anything else, can you explain to an 8th grader what it is that you are investing in? And I tell you, it's so often that the answer is no, that it's concerning. But, you should be able to pretty precisely ask yourself that before making an investment decision on your own behalf of, okay, yeah, I heard about this ticker symbol because somebody was talking about it on CNBC. That's great. But what do they do? What's the business model? What's the investment strategy? Tell me some of the basics. And if you can't, that's a pretty big red flag to start looking around and understanding things a bit more. If you have stuff like that in your portfolio, if you're considering a new investment in some new strategy that's being talked about or that's gaining popularity, or your neighbor or your cousin or uncle stepchild told you about, give the folks at Armstrong Advisory Group a call and let us at least help you understand how it may or may not fit into your overall investment strategy. There are a lot of good things about the potential for new investment strategies to be available to the general public. There are also a whole bunch of pitfalls that can occur with it. The number for the Armstrong Advisory Group, 800-393-4001. Let us sit down with you and analyze how these things work with your plan. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
So I got to be honest here. So there's this piece from CNBC. There's a bunch of other places that have picked it up, and it quotes a memo from Satya Nadella talking about basically
job cuts.
Well, the memo's not about job cuts.
Yeah.
The memo is, basically about, hey, like, what is Microsoft trying to do this year? Like, it's a message for, like, the new fiscal year. And I guess what I'm getting at here is a bunch of different places have seized on this to say about this one quote where he says, before anything else, I want to speak about what's been weighing heavily on me and what I know many of you are thinking about, recent job eliminations. And people are criticizing him, being like, oh, like, if you really cared that much, why didn't you just, like, keep these jobs? And look, to a certain extent, I get that. My favorite quote from The Godfather is, look, this is the business we've chosen. You don't get to complain about stuff that you have to do in that role. If you don't want to lay people off, don't be the CEO of Microsoft. So I get that to a certain extent. And obviously it's worse for the people that have been laid off than for Satya Nadella. But this is like probably a 1,500-word piece talking about how Microsoft is trying to evolve. And this is one sentence in it, which is basically just trying to acknowledge, hey, I understand that this is not easy for you. It's a little bit hard for me. Does he need to put that in there? I don't know, but like,
I think generally speaking, when you're talking about job eliminations, you avoid talking about yourself at all costs. But otherwise, it was a minor slip-up.
I agree. It's just like, if this is what we're going to freak out about, come on. Quick break here. When we return, next hour.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide for the month of July, AI and Your Financial Plan. Paul, one of the big areas that is a pain point for a lot of folks is working on their budget. It's kind of the step one for your financial plan. And I know there's a number of tools that are starting to incorporate AI in their budgeting plans. How is this starting to work and benefit folks?
Yeah, like you mentioned, Mike, it's an area which is really difficult. You ask a lot of the clients that we meet with on a regular basis, how much do you spend on a monthly basis? Simple question, but hard to come up with that answer. What these AI tools can do is aggregate all of your total spending together, categorize different areas, and use that data to try and project what you may spend in the future. This is a critical step in the retirement planning process to get a sense for what are you spending today and can you afford to spend that much in the future. It is important to note, certainly, that there are drawbacks that come with it too.
Yeah, talk to me.
This is a technology that's in its early stages, and it's only as good as the data that's fed to it. There can be some issues sometimes with properly categorizing certain types of expenses over time, and as such, you have to be very careful when you're using this type of technology and perhaps vet it against your own assumptions through that old school spreadsheet fashion as well.
It's always a good idea, but especially when we're talking about brand new emerging technologies. Folks, the brand new guide from the Armstrong Advisory Group is all about AI and how it could affect your financial planning strategy. If you would like to get your free copy, call the Armstrong Advisory Group at 800-393-4001. The guide again is AI and Your Financial Plan. It's available at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Stocks continue moving on up, at least if you don't look at the Russell 2000, but the Dow Jones Industrial Average is now up 98 points on the day. The S&P is up 15 and the Nasdaq up 39. It's Chuck, Mike, and Tucker with you, and continuing to see the rally that started in late April just clipping right along here, I got to say. 10-year Treasury unchanged at 4.408%. The Mortgage News Daily National Fixed Rate Average for a 30-year mortgage currently sits at 6.81%. That has just not been moving anywhere in the last few months. We've basically been between like 6, 7, and 7, so it's right in the middle of that range at the moment. Oil, West Texas Intermediate, down 44 cents a barrel to $65.59. And we've got gold down $40.50 an ounce to $3,333 even at the moment. Anything else catching your eye, Michael?
Not particularly. Relatively calm upfloat in markets today.
So let's talk a little bit about what we are seeing in the travel industry. We got a couple different pieces discussing this. The first one from the Wall Street Journal talking about airlines and basically saying, hey, things are not great in airline world right now. You've got a whole bunch of, different things potentially impacting it. But overall, what we're seeing is airlines are cutting capacities in the second half of the year to try to manage, how full their planes are. And that's not something that you normally see outside of recessionary environments. It's just really unusual, quite honestly. And I think what we're seeing here is that a couple of airlines are doing well. Everyone else is kind of just puttering around. And basically, if you're not Delta or United, you're having a tough time dealing with this environment right now.
Is this more of the same from what we've been seeing in terms of just consumer trends, right? There's a good half of the American public that are struggling a bit with the state of the economy right now, but if you're United or Delta and have a vast international setup, substantial first-class cabins, then you're holding on to this just fine. It seems to me that this is a bit of a domestic airline issue that seems to be drying up a bit.
Yeah, well, I think it's very much, the story is it's the opposite of the early 2000s, where in the early 2000s, the discount carriers were eating everyone else's lunch.
Yeah.
Southwest, was expanding and growing and just, taking market share. JetBlue was doing the same thing. Same with Frontier and Spirit. And the legacy carriers, which, again, you've got Delta, American, United. At the time, you still had Northwest floating out there. You still had U.S. Air out there. A lot of those mergers happened because the big legacy airlines couldn't be profitable fighting off these upstarts at the scale they were at. And so you ended up with all this consolidation and a number of bankruptcies happening in the early 2000s as well. And so it was kind of a time that was not great to be a legacy airline. And instead what you're seeing right now is because the place that Delta is, not just Delta, but Delta and United in particular among domestic airlines, the place that they're seeing the biggest growth is among people who are willing to pay the extra money for the luxury seats, particularly on international flights, but also long-haul domestic. They've been putting these on there. If you're flying, Boston to San Francisco, Boston to LAX, those types of routes, JFK to LAX, those types of things. You've got, plenty of these, expanded, what would typically be, kind of international first-class setups where, you got the seats that lay, flat and this and that, and you're finding that the companies that are offering those products are able to find takers for them, and the margins on those are way better than trying to sell seats for $250 a pop to people flying 6 hours across the country.
And even the airlines that don't have that offering are trying to find something along those lines. Like, what can we offer as a buy up, as a upgrade in some way, shape, or form, even if it's just slightly more legroom or some sort of meal package that we are going to sell, because people are apparently bidding up for that right now. That seems to be the crux of the changes going on at Southwest, who's going to start charging for bags. I believe this next month. They're going to be changing their reservation status, so it's actually booking seats. And frankly, just trying to look more like these airlines. Part of me wants to say that's you're shifting right as we're peaking in terms of this type of travel demand, but I don't know. Like, this type of trend that we're seeing right now could play out for quite some time until the economy kind of breaks and you once again have that search for value, which is just not being looked at right now.
Yeah, I mean, you think about the people that think about that premium ticket and who's paying for it. And I generally come up with three groups: businesses, wealthy, people who are working, high income earners, and wealthy baby boomers who are retired and want to travel.
Yeah.
Like those are my three groups that I generally get to.
Yeah, so generally wealthy, businesses sending their employees, and baby boomers who are splurging on that ticket that they just want the extra comfort in their slightly older age and are willing to splurge.
And I guess I look at it, and the business travel will come and go, but those cycles play out over the course of 3 or 4 quarters. They're relatively quick. The shift that you see when you're talking about high income earners, That might be a little longer just because unemployment can act with a little bit more of a lag on a business cycle, so that can play out over a few years. When it comes to wealthy retirees and the growing numbers of them, I'm not saying that that's like a recession-proof area because it's not, but I think there's less wiggle there than in other places, and that's an increasingly large portion of our society today.
Yeah.
Now,
that's fair.
Obviously, here's the caveat. Look, if markets go in the tank and people don't feel comfortable because their portfolio's down for an extended period of time, fine. But you've got to prove to me that that's going to happen first.
Well, that's going to hit the entire airline industry. I don't think it'll just target the deltas. Maybe Spirit fares a little bit better in that type of environment, but I can't imagine substantially.
Yeah, so I think ultimately, if I'm an airline and I'm trying to game this out, I still think adding more premium capacity is the right thing to do, as long as they're continuing to see that they can fill it. You don't want to be like, hey, here's a first class plane. It's like. Even though I do believe some international carriers do that with some of their planes, just because when you get to these really long haul routes that are 11, 12 plus hours, they're like, okay, we'd rather just get the money from a smaller number of people flying one flight a day. Okay, we can do that, but domestically, I don't know that makes sense. But so this is what we're seeing with airlines. The other piece that's interesting here, and I'll tease this, and then we'll get to it when we come back. But Airbnb is trying to expand its business from just renting out people's homes into, kind of being a broader travel app that can handle more parts of a trip than just, hey, here's where you're going to stay that's not a hotel. So let's take a quick break. We've got some trivia, and then we'll talk about Airbnb's expansion plans after this.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Artificial intelligence isn't just the future, it's already shaping how people think about their money. Hi, this is Chuck Zodda from the Armstrong Advisory Group. We've put together a new guide called AI and Your Financial Plan. In it, we explore the ways that AI is being used in financial technology, from apps that track spending to tools that can help identify trends. It's a rapidly changing space, and this guide is designed to help you understand some of the potential benefits and risks that AI may present. Want to learn more? Call 800-393-4001 and request your free copy of AI and Your Financial Plan. That's 800-393-4001 or visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it.
Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on this day back in 306, don't you remember, Constantine I was proclaimed Roman emperor. Constantine's two most notable acts as emperor were converting to Christianity and moving the capital city from Rome to a city he reestablished called Constantinople. Trivia question today. What is the name of Constantinople today? Once again, what is the name of Constantinople today? Be the third person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
All right, so Airbnb, which has been around for... We're around 15 years now, right, Mike?
Sure, yeah. Sounds right.
I want to say like 2010 is when they originally started, where the whole name came from the fact that they were renting out air mattresses in people's homes for basically like 23-year-olds to sleep on and move around the country and travel and stuff.
Founded in 07.
07. Okay,
Yeah.
There you go. I first heard of them, I think, maybe back in 2010 or 2011. I guess I'm not on the cutting edge. So the big thing they do, obviously, they rent out homes, rooms in homes, all kinds of stuff for, short-term rentals. They got millions of different listings, all kinds of different stuff. You can stay in, fake spaceships and mushrooms and anything you want. You could basically, rent out from them. But
a yurt.
A what?
A yurt.
I don't yurt.
Okay.
I'm unyurtable. But what they're talking about trying to get into now is what they call their Experiences and Services Division. And they tried this back in 2016. It didn't work then. But they did a big app overhaul a couple months ago. And what they're trying to do are offer additional items, additional things for people to do in addition to just, having you book the place. So, hey, you're going to Stowe in Vermont? Great. Do you want to book a ski lesson?
How about we book a private chef to come into that home you rented in Stowe, and they'll cook for you for the
right.
evening.
Yeah.
You're heading to the outskirts of Paris? Hey, let's go on a truffle hunt. Like all kinds of stuff that you can do.
Here's a fun one. I'm looking up in Portland, Maine with our affiliate up in WGAN here. Oyster shucking class, $79 a guest. Like, that's cool. I like that.
Seems expensive. It's not that hard to shuck an oyster.
Well, maybe there's somebody who's never shucked an oyster, Chuck.
79 a person, though?
79 an
oyster.
oyster.
That includes...
Wait, are we shucking the people or the oysters?
$79 a shuck.
What are we shucking?
So I guess my main question on all of this, and I get that it's integrated into the same place that I'm booking my Airbnb, and so maybe there's something there, but what about any of this is something I can't get on TripAdvisor?
Well, and there are a bunch of companies that do this specific thing, like just booking services.
I know. I've booked a few of them for my upcoming trip. I'm going to Spain next month. Very fortunate to be doing so with my wife for our anniversary, and we've used TripAdvisor. We're staying at hotels, not Airbnbs, but I've already booked a few of these types of experiences through TripAdvisor, where they've got a couple decades worth of reviews built into there for these different types of experiences.
Now, the idea of it being one-stop shopping, sure, I get that. That could be, nice, and I could understand that. But it's something where you've really got to, figure out, how do you make this, big enough so that people know to look for it. But the other piece that I've been thinking of on any of this, so it's one thing if you're booking, something that is... I guess if you're integrated as someone's booking platform, but let's the private chef thing is an example.
Yeah.
Let's say that I have a great meal with that private chef, and then I go back to the same Airbnb next year. Wouldn't I have just gotten the chef's contact info and just booked separately outside the app after?
Maybe he's exclusive to Airbnb. Maybe he has a deal with them. I don't know.
Doubtful. But
probably.
Fair point. So if it's going to be a repeat, then it's not going to happen. Although if you're booking Airbnbs, I don't know how much of that is actually repeat type business. You're going back to Airbnb, but maybe not to the exact same location. 2 would be, okay, so a private chef is probably pretty harmless, but you think about some of the experiences like this. Do I really, as an owner of a home, feel comfortable with, okay, I've already rented it out, now I'm allowing a private chef or masseuse to come into the home separately and they also get my address and details? I would imagine there's been some pushback from homeowners,
right,
too.
Who are these people that are coming in? Have you vetted them? Is that okay? So... yeah,
who's liable for when the private chef loses it and burns the house down? They weren't on the rental agreement.
Does that happen often?
I don't know.
But their whole job is to not burn the house down.
Chuck,
otherwise,
or a guest cuts their finger by an accident. Or something like
something
that.
harmless like that. But you've got some complexities here where I've got a rental agreement and insurance over this specific scenario. Now we're completely reshaping it. I don't know. I don't know that this is going to be as big as Airbnb's hoping. I do think, the everything app idea of, hey, if I'm booking my Airbnb, why can't I just book my flights, my car rental, and other things right in the same app would be useful, but I doubt that's terribly high-margin business.
Yeah. I mean, there's enough of a business there. There's plenty of companies that, make their bones on... Expedia still exists. It's a $24 billion company.
I've got my credit card through them.
They have a credit card?
They do. Yeah.
What do they do?
What do you mean? What they offer?
What do they do on the credit? How'd you pick that one? If we're talking about travel stuff.
I picked it because we usually stay in hotels when we travel, and I attempt to book my flights through them or book my cars through them, and so they have a credit card. If you use it on their own site, then I think it's 5% cash rewards back. Otherwise, it's 2%.
Oh, that's nice.
Yeah,
that's nice.
So, but yeah, those things do exist. They're profitable companies, so that exists. Uber wants to get into the same type of business of booking everything there. Does Airbnb have rewards? That's the main thing that I feel like is lacking.
I don't believe so.
Because the other thing, Expedia also owns Vrbo. So, when I'm booking, when I rarely stay for travel outside of a hotel instead in a house, I'm trying to book it on Vrbo because they're part of my rewards points system. That seems to be lacking for a travel company.
Yeah, I guess the counterpoint is if they thought it would matter, they'd probably add it by now.
Yeah.
And I wonder why they don't actually.
Would it seem pretty easy to partner with some credit card company and offer rewards points on it.
Yeah, I can't make heads or tails of it, but there must be some reason. Again, it's a fairly mature company. It's been around 18 years now, and it's not that hard to roll out a rewards program. I mean, like you go to like the deli down the street and they clip your card 10 times and you get a free sandwich. So I don't know.
Just surprising to me. Yeah.
Give me a sandwich when I go to the Airbnb. Taking a look.
Show me how to make a sandwich.
Now we're cooking, pun intended. The Dow Jones Industrial Average is up 67 pointeroonies. The S&P is up 17. Nasdaq up 58. So up about 0.3% to 0.25%. I know that people don't usually
that's helpful
talk in 20ths, but we do. So get ready. We're going to take a quick break here. When we come back, we do have the trivia answer. And then I want to talk McDonald's after this. I think there's something like there's a lot of meat there, again, pun intended. And so we're going to talk McDonald's when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets slightly in positive territory one day after the S&P 500 and Nasdaq notched yet another record high. At the moment, the Dow's up by nearly 0.2% or 77 points. S&P 500 is up by nearly 0.3% or 17 points higher. Nasdaq is up nearly 0.3% or 57 points higher. Russell 2000 mostly flat, dipping into negative territory. 10-year Treasury yield currently at 4.40%, mostly flat, and crude oil is off about 0.75%, trading at $65.53 a barrel. Big news in the tech space today surrounding struggling chip maker Intel after it reported a wider quarterly loss and also said it will cut 15% of staff as it seeks to refocus on AI chips. Intel stock is now down 9%. Meanwhile, the FCC approved Paramount's $8 billion merger with Skydance Media, paving the way for the deal to close in the next few weeks. Paramount shares are now down actually over 1%. Sticking with media, where Charter Communications is dropping 17% after the cable operator fell short of quarterly expectations. Elsewhere, Centene shares are up 6%, despite the managed care provider posting a quarterly loss that saw membership declines across its Medicaid and Medicare businesses. Decker's Outdoor stock is jumping 12% after the maker of Ugg boots beat earnings and revenue expectations. Deckers cited higher than expected sales of its flagship brand as well as its popular Hoka sneakers. Volkswagen lowered its financial guidance after its first half earnings were hit by $1.5 billion of tariff costs, and online used car retailer Carvana upgraded by Oppenheimer to outperform, where the firm said Carvana's business model is now humming, generating meaningful cash. That stock is up by 2%. Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the trivia question, what is the name of Constantinople today? That would be Istanbul. Mindy from Jericho, New York is our winner today. She's listening on Sirius XM Business Channel 132. Congrats to Mindy. She's taking home a Financial Exchange Show t-shirt. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, I really want to dig in on this McDonald story from the Wall Street Journal, and not just because I'm partial to McDonald's.
Oh, I thought you were going to say you're hungry.
It's that too. I'm hungry, but it can be both. Look, I have a long, deep love for McDonald's. It's something that I really enjoy, and so this article about, hey, how did they lose their way on pricing is interesting to me. And you know, I'm trying to sort through what's going on here because the article talks about a few different things that we have to consider. The first is that you have to remember most McDonald's that operate in the United States are not owned by McDonald's corporate. They're franchise owned.
Yep.
And it's not to say that, franchise owners don't have any money and things are, always hard for them, because I think at this point, in order to be a franchise owner of a McDonald's, I think you have to commit to being able to own like 5+ or 8+. So it's like you got to have some cash behind you in order to do this. But obviously, when McDonald's runs promotions, anything that they're doing on a national level, their franchise owners have to eat that in some way, shape, or form in their cost structure. And so it can become difficult in order for the franchises to get along with corporate and the employees to get along with franchises. It's not always easy for all of those things to coexist. But there's one quote in here that I want to get at, just because I think this is one where I'm trying to figure out, what happened here. And it's about 2/3 of the way through the piece. And it says, quote, "Fast food in general, and McDonald's specifically, no longer feels like the good value that it once did, the kind where you can get a filling meal for $5 to $8, said Terry Wu, age 36. And I guess what I'm wondering here on this, and I don't have any data to back this up, but, which is always like a great thing to say, like, hey, I got no data to back this up.
But here's my theory.
Here's where I'm going with this. When Terry first came into the workforce, he's 36 now, so 15 years ago, 2010 was when he came into the workforce. If you look at average hourly earnings, this is according to the BLS job report that we get, so I'm not using, everything like crazy, this and whatever, but one data set. Average hourly earnings were around $22 an hour back in March of 2010. Today, it's $36.30. So if you do the math on that, since Terry came into the workforce, and again, I picked March, but let's pick June just because that's probably when he graduated. So June, it was $22.50. If you look at this, average wages have gone up by 61% over that time. And let's say the average Big Mac was $7 back in, even let's call it $6, $6 back then. If you multiply that times 61%, it gets you to $9.66, which is pretty close to the average cost of a Big Mac right now. So in terms of a Big Mac's cost per hour of work, I suspect it's basically the same as it was 15 years ago. But the problem and why everyone hates inflation is it went up really quickly in a few year span period and made it really noticeable as opposed to it playing out over a longer time span. And so because of that, in my opinion, is why McDonald's is struggling here. Because I still remember, my grandfather, when he was still alive, he'd be like, hey, I'd go see, Brooklyn Dodgers game at the Polo Grounds for a nickel. And you can't do that anymore. And it's the same vibe here. Not like, I'm not saying it in a critical fashion, but just, hey, because
what you're saying is he's wrong.
Yes, I am saying he's wrong.
Yeah.
If you look at the cost of a McDonald's meal relative to where it was 15 years ago, it's basically gone up by about as much as wages have. Same thing if you look at Chipotle. Tucker, you're a big Chipotle fan. When you graduated, you're a moderate Chipotle fan. You've gone to Chipotle.
Yes, correct. We got that.
When you graduated from college, what did it cost to get a meal at Chipotle?
Oh,
$10, $11.
Yeah, I was going to say 12.
Now it's like 16, 17. I went there the other night, just as
silly.
an example. It's up about 60% over that time. It's the same thing. And so I think part of this is we get anchored onto certain prices because it's what we were used to at, usually a certain point in our life. Like the point in our life when we started paying for things ourselves. And whether that was when we were 14, 18, or 22, when prices change from that reference point, when they move enough, we start to feel it. If it goes from $11 to $12, we don't. But if it goes from 11 to 18, we do. And so part of this that I'm wondering about is a lot of the complaints that you're seeing, like, are there many, 80-year-olds that post social media complaints of McDonald's prices?
Not that I'm aware of.
It's a lot of people, I think,
don't
in their 30s.
know a ton of 80-year-olds on social media, to be honest, though.
I do.
Yeah.
But I think it's a lot of people in their 30s and 40s where the reference prices have moved far enough that it's just like it feels wrong. And so I'm actually going to say I don't know if this is a McDonald's thing. I think this is just a bunch of millennials are now seeing stuff that's way more expensive than it was when they first started paying for it themselves, and that's what the reaction is.
So I'm gonna actually say I don't think that's McDonald's problem. I still think they are the cheapest game out there. I just think that there is so much more competition now. That's where I would go, and that was mentioned in the piece, right?
There are more choices.
There was not the option when I graduated college to go to a Chick-fil-A. That was a uniquely positioned fast food restaurant in certain parts of the country. In-N-Out Burger and all of these other fast food joints have popped up because that's just a growing piece of the food segment, of the dining out segment, is people want to go do the fast food thing. They don't as much like TGI Fridays and those other places that have existed for decades as a sit-down restaurant. They're pushing towards these types of places. And so I'm more interested in, hey, McDonald's, if you're going to stick with your theme of being the standout cheapest option out there, then you kind of have to go back to what made you that in the first place. I think about like the remember The Founder, the movie about McDonald's that was released a decade ago?
Yeah.
It was all about the efficiency, consistency, and cost cutting. And so McDonald's, what are you going to be able to supply your franchisees with this time to do it again, right? Is it robotics? Is it the outsourcing of ordering further? I mean, I know they've done a fair bit with the app to try and push sales that way, but that would be my question for McDonald's now is that your goal, to maintain this position of the low-cost fast food place? Then you're going to have to take it a step further, and it's going to be – that's the only method I can think of, is pushing into robotics and automation.
And this is all happening with the background of beef prices going up as well.
Yep.
So there's that. Let's see. Let's take a quick break here, but when we come back, Stack Roulette.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
Mike, what do you got for me for Stack Roulette?
I want to talk a little bit about robo-taxis. We were talking about Tesla yesterday on their abysmal earnings, and the Financial Times has just a piece out. What will it take for robo-taxis to go global? Speaks a lot about the dominant player in this space, which is Waymo to this point, and what it is that Tesla is trying to do. And if I were to summarize, what Tesla is attempting to do is precisely what Waymo's done, but for, I'm guessing, about a sixth of the cost per vehicle. And tall order to pull off. I mean, for anyone unfamiliar with Waymo, they are Alphabet, meaning Google's division of self-driving cars. They're prevalent in Phoenix, Arizona, Austin, Texas, San Fran, maybe San Diego as well. I don't know about L.A. They operate pretty darn well, pretty darn safely. They've completed hundreds of thousands of rides at this stage, but most analysts are guessing that it costs them $150,000 to put one of these cars together. They are an electric vehicle with a big set of cameras on the top, and while they have proven relatively safe, not, at $150,000 per vehicle, that's not something that is going to scale very easily. What Elon Musk and Tesla are attempting to do is pretty much that exact same thing with a car that, sells retail for with full self-driving, like $45,000 to $50,000. Can they pull it off, and can it scale is the question, at least here domestically. Obviously, China and Chinese-made car companies are trying to pull off the same thing elsewhere.
Yeah.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Well, Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility by calling 866-848-5699. That's 848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
I got a couple pieces from the Financial Times that I want to cover. First, one that's really interesting to me. Chinese kindergarten enrollment has dropped by 25% in the last 4 years.
What?
In 2021,
population dropping that quickly?
In 2020, there were actually it's really in 3 years. In 2021, there were 48 million Chinese children enrolled in kindergarten. Today, there are 36 million. That's not great from a population stability standpoint.
Dear
Again,
God.
If you think the United States has demographic problems, take a look at China. In China, they have seen nationally, again, like Chinese government keeps these stats. They are what they are, so like take it with a little grain of salt. The number of kindergartens has dropped from 295,000 to around 250,000 during that time as well.
See, the government really tries to restrict the data on things like how many births there are and puts out all sorts of fake data, but every once in a while I feel like we get one of these statistics that is indicative of what's going on with the population, but not directly vetted by the Chinese government or in some way, shape, or form. And that
this is the National Bureau of Statistics from China.
Wow.
The other thing that's fascinating, this is going to get worse, by the way. Chinese kindergartens, it's basically like preschool, so it encompasses several years. And the reason why this is going to get worse is that this still has a number of people who were born in 2019 and 2020 when China was having 12 to 14 million births a year. It's down to 9 million now. And so basically, like the peak that we saw was around 18 million in 2016. There's a pretty good chance that the number of children enrolled in Chinese kindergartens drops by 50% from its peak in the next couple of years.
That's pretty wild.
Which is wild. The other piece that I want to read from the Financial Times, just because, again, we're always trying to sort through what's going on and like some of the details of these trade deals. This published 33 minutes ago. Quote, cracks widen in Japan and U.S.'s interpretation of tariff trade deal.
Oh, boy.
This is from Harry
barely
Dempsey.
Been baked.
The U.S. will secure 90% of profits from joint investments with Japan only if it takes on a proportional amount of risk in financing, Tokyo said on Friday, as cracks widened in the two allies' interpretation. Japanese officials also said there's no written agreement with Washington and that they would not be drawing up a legally binding one after the Trump administration officials claimed Tokyo would back investments from the U.S., which American taxpayers would reap 9/10 of the profits. So pretty much like the Japanese side is like, we're not signing anything to this effect, actually. Like, you can say this, but here's our interpretation, and we're not signing anything that we're actually going to do this.
Well, look, I mean, this could go in a few different directions. Is an unwritten
deal really a deal?
No, it's
the
not.
Question.
It's not. And so this could go in a few different directions. Either we could be not talking about this on Monday because it gets worked out and gets signed and gets executed.
It's not going to get signed.
Yeah.
Japan's saying they're not going to sign anything.
Yeah.
I mean, like it is what it is. Like the tariff rate apparently is down to 15, but the Japanese negotiators are saying that they are not actually signing a formal deal. Like it's done for what it is, and the tariff rate's going to be what it's going to be. But Japan is saying they're not signing anything.
Right. So does the investment come? Does the other side of that deal come? And then if it doesn't get executed, what's the tariff rate? Might be 15% for now. But once again, if you're an importer here in the United States, you have zero confidence of where it's going to be tomorrow.
Taking a look at markets as we head towards the top of the hour, the Dow's up 47 points, not 470. The S&P is up 16 and Nasdaq up 59. So we still have S&P and Nasdaq on track for new all-time highs if they close at their current levels. The Dow's still just a little bit off that, about 1% shy of their previous all-time high. We'll see if that can get there as well. Big week next week for data and earnings. We will see you Monday. Have a great weekend.